Hello, Maverick Currency traders. This is Rob Reinhold. I am joined by Ankit Sharma, and here we are. We are pretty close to the end of the year, second week of November. Let's jump into it. In this session, we're going to take a look back at the previous week. We'll take a look at the commodity markets, the equity markets, the cryptocurrency market, and then we will basically take where we are right here, right now, and say, do we have a technical scoring change? I'm going to give you a little spoiler. We absolutely do have a technical change today that is going to change everything we do in trading going forward. And we're going to go through every single currency, give it a score from -3 to +3, and then we pair up the strongest versus the weakest. +3s against the -3s, and we look for specific setups on the chart.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's get ready for next week.
In this week, we had another little extension of the rally that we saw 2 weeks ago. 2 weeks ago, the S&P got down to 4,100 and had a massive 7% jump. And we jumped all the way back above the 50-day moving average. And this week, I said, hey, look, either one or two things got to happen. This market has got to take a break, where they're going to hold here, or we're going to roll back over. And I don't know which one it is. We'll have to wait and see. Well, guess what? We got the confirmation. It held. The markets held very, very nicely this week. We saw bond yields continue to fall. 2 weeks ago, we were at 5%. We got all the way down to 4.5%. And then on Thursday, the market bounced back a little bit to 4.6%. The stock market did not like that one day, but in the end of the week, we actually had a positive week in the stock market. And if you take a look at the dollar is refusing to roll over. I've talked to some traders that are just waiting and waiting for the dollar to roll over. And I said, I don't think it's yet. I think you're much better off being short yen. Last week, we heard from the RBA. They did exactly what the market expected, raised by 25 basis points. And the Aussie gave back a little bit of its recent gains. It's been the strongest currency over the last 2 weeks. And then the rest of the week, not a whole lot. I do want to point out China CPI here. We talked about how China is in a little bit of deflation, and sure enough, they came in, it's a little bit worse than expected. And then we see the pound GDP came in much better than expected. So the pound is looking a little bit better here, but not much. So overall, really not a whole lot of news this week whatsoever. Let's break down all the numbers from last week. Here's where we were at the end of last week. We liked Bitcoin the best at a +3. We liked Ethereum at a +2. And the Aussie was showing some strength. As I mentioned, the Aussie did not have a strong week. And then on the downside, we liked short yen the most. Let's take a look at what actually happened here when we look at performance last week. First off, let's check in on the equity markets. S&P up 0.94%. VT, the world index, basically flat. Crypto had a great week. Gold was really hit. Down 3%, it's a big move in gold. And oil just keeps falling. Now, for oil investors, it's pretty sad. But for oil consumers, it's actually quite good. We have oil now back into like the $75 range. And gas prices are coming down very, very quickly. Let's take a look at the S&P chart. Last week, in the currency room, we were right here. This is where we closed this last week. And I said, look, it's tired. We just ran 7%. We either need to do one of two things. We need to either pause and go sideways, or this is going to roll over. And again, we might go all the way back down to like 42.40, somewhere down in this area. And I said, I don't know which one, but I'll know much better by the end of the week. Take a look at this week. We had buyers come in on Monday. Buyers come in on Tuesday. Wednesday, long lower shadows. Thursday was an ugly day. It was an absolutely ugly day. And the question was, would the buyers come back in on Friday? And you can see the answer is absolutely yes. We've got a nice high base here. And you can see that we are poking our heads out above major resistance. This is a confirmation to me that this low back here was the low of the year. Now, the only question is, do we close significantly higher here for the random? Do we trade substantially higher from here? Or is this just where we just waffle around through the end of the year? I think we'll see that the markets definitely look like they want to go up at this point. If we take a look at the performance, if we take a look at the performance of last week, we had the dollar, Swiss franc, and euro had all been kind of turning over, and you can see they had a bounce. Now, in the world of trading, things are going to move out all over the place, and things are going to be moving in trends. And if things are going in uptrends, at some point they'll have pullbacks and bases. And the question, whenever you get those moments, the question is that the end of the trend, or is there going to be a continuation? So we use the term continuation or reversal. So dollar, Swiss franc, and euro, sorry, let me take that back. Yen, dollar, Swiss franc were all in downtrends. And dollar and Swiss franc had these big rallies. We're going to take a look at these charts, and the question is, okay, were those just bear rallies that we want to sell into, or did something fundamentally change? And then we're going to take a look at the Aussie, because the Aussie was looking great. We knew it had to have a pullback. It sure did have a pullback. The question is it continuation or reversal? Now, there's no question in the crypto market, it was continuation. It was absolute continuation. We liked both Bitcoin and Ethereum, and you can see they had fantastic weeks. Let's go into the market and take a look at it right here, right now. Let's see what's going on. We already took a look at the S&P, and the S&P is telling us that the equity markets want to go higher. We just had a 7-day rally or 7% rally, a 5-day base, and we're now breaking out at the top of the range. That's a resistance level. To me, this market is a +2 market. We have not been at +2 since July. So this is the first time since July that the technicals have been telling us to be bullish in equities. I want to take a look at the bond market. Now, the bond market had a big pullback, and this big pullback, we came down, and I want you to look at the price action here. Because yes, it bottomed out, and it had a little bounce on Thursday, but this is more of a base. This is more of a base than a bounce. Back here, look, this is a bear rally, or sorry, a bull pullback. That's not the kind of price action we're getting, which tells us that the next move is likely to be lower from here on bonds. We are in a base, so we assume they're going to go sideways, but bonds say that they're likely to move lower after this. And we come over here to the cryptos, and what is there not to like here in the cryptos? I mean, it looks absolutely wonderful here. We broke out, and we are now off to the races. So this is just very, very positive. There's no reason at all to be bearish crypto here. Now look, I don't love Litecoin. I don't love Bitcoin Cash. But Ethereum and Bitcoin, this is what we wait for when we trade cryptos, for them to start really moving. And when they move, we want to trade them. When they're not moving, we don't want anything to do with them. This is one of those times during the year where we are looking at cryptos as a very good trading opportunity. If we take a look at the schedule for next week, we do have some pretty substantial things going on next week. First thing I'm going to take a look at, if you're trading the pound, climate count change. That's on Tuesday. And then also on Tuesday, take a look at CPI. US CPI is likely to be the biggest report next week. That comes in on Tuesday morning. And look, one of two things are going to happen. Either the CPI is going to come out hotter than the market expected. And what we probably see then is we probably see the dollar strengthen. And we see bond yields probably move back up, which puts some pressure on equities and any risk assets like Aussie and Kiwi. Here's a weird thing. Cryptos did really well when the bond markets were moving higher. Cryptos did really well when the bond markets were pulling back. Right now, the cryptos aren't correlated to bond yields. So I actually still really like the cryptos here this week because they're not correlated to all these things that are moving. They're just at the march of their own drum. They're doing their own thing. Also, on that night, we've got Aussie wage prices, and we have China industrial production. As you can see, Tuesday is just a killer day for news report goes. Aussie's going to be in play later, and dollar's going to be in play earlier in the day. Wednesday night, we've got Aussie employment report. And then after that, really the week is done. I don't see anything of any importance after that on the schedule. Make sure you are aware of all the news this week if you are trading currencies. We do not have any central banks this week, but we do have some major economic reports. Let's go in and take a look at all of these currencies one by one and give them a score. I'm going to run through the cryptos, and Ankit's going to run you through Forex. Bitcoin, what is there not to like about Bitcoin? We've got a long high base, breakout, looks great. Everything looks good. So for me, I still like Bitcoin quite a bit. The big question is, do I like Ethereum better than Bitcoin? We'll get there in a second. Bitcoin Cash, don't bother. Don't bother. It is not in play right now, so don't play it. Ethereum had a really nice breakout, and it had this rising base. I love rising bases even more than high bases. They tell me that there's tons of buying here. We already had a really big pop off this. For me, you got to wait for Ethereum to base or pull back. So I do like Bitcoin better when taking a look at both of these technically. Bitcoin still seems to have a little bit more gas because Ethereum just had such an explosion this last week. And then Litecoin, okay. Litecoin looks okay. All right, we're basing up here. If we can break out of a base, maybe it gets in play, but why chase this one when you've got Bitcoin that's running at the moment? Ankit, will you take us through Forex?
Absolutely. Let's just start with the US dollar. And again, one of the things that we've been talking about when we look at the charts is relative strength and weakness. And we talk about how the dollar was not really a great long or short at this point. And I'm glad that we just stayed out of this because last week, the way we closed, everybody was looking for a sort of a basing pattern or a bear rally to short into. And I mean, look at where we are. We have climbed back above Friday's jobs report now into the Thursday's price action. So we are back to where we were. So we can still look at this and say, well, is this a bear rally? I think that's still the question. I personally think that we are going to see a catalyst off this US CPI report next week. But for now, I am more on the bullish side for the dollar than the bearish side. I mean, take a look at velocity. Not only we rallied, we usually get a bear rally, but then that rally fails. In this situation, we're still holding. So it remains bullish on the market, on the US dollar. Now, when we take a look at the yen, I mean, look at that short. I mean, that's one of the reasons why, we talk about, is the dollar better short or is the yen? Yen is clearly a better short. So here we are. We have broken that pretty good support, from entire October and early November. Now we're making another low base. So I like this more to the downside. Again, there's nothing in sight that would stop us from this from this breakdown, unless what we have seen is that the yen does well when the markets are not doing well. So right now it's the opposite. As long as the market stays bullish, I think the yen is still looks like a good short to me. Now, in the European currencies, we are seeing some interesting things. I mean, we've seen euro and the Swiss franc, and take a look at Swiss franc. The big question really, I mean, same question I'm asking as we were asking for the dollar is that, is this a bear rally? Because, the Swiss franc has been the strongest currency. We did pull back, and then we can see that we pulled back late September, rallied all the way back up in October. Now we pull back again. So is this a lower high and a lower low? I think it's in the middle there. And looking at this, I mean, this is the first time I do like Swiss franc short over long, because when we jump into euro actually looks better. The entire year, I mean, going back to last year, euro has underperformed compared to the Swiss franc. And now we're seeing the opposite. So if that's the case, we want to be in the currency that's actually moving. So I do like euro more than I do like the Swiss franc. And I think that's where we are getting a better trend score and a better velocity score. Now, the British pound is lagging here. I want to point out that last year, British pound did really well. I mean, entire year so far this year has done really well. But this is not rallying the way you want it to be. This looks more like a a anemic sort of a bear, sort of a rally that we're getting that can easily fall off. So I think this is something that I don't like as much to the upside. I do like euro more than I do like the pound. So I'm staying off on hold for pound. We'll have CPI numbers next week. We'll see which way the pound moves. But right now, there's another price action I want to be going long. Now, looking at a better price action, I mean, growth currencies. So starting with the Canadian dollar, let me take a look at Canadian dollar. So we have seen a very nice correlation between the US dollar and the Canadian dollar. And from time to time, they sort of deviate from each other. You can clearly see that the dollar and the CAD, they're deviating from each other, which means that CAD looks like a better short than it does look like a long, where the US dollar is back to where it was. So I don't really love the CAD as a long, but if the dollar rolls over, I think the CAD will roll over with it. So I think I like a CAD more to the downside, plus adding the pressure from the oil that has been falling. This is setting up nicely for a short than a long. But we'll see what happens with the dollar. But based on that, I do like on the short side. Now, Aussie and the Kiwi, I think I had a lot of questions this week. This is where we had a curveball because we broke out. We almost made a new high in the Aussie. And then look at that. We went from a +2 now to a 0. So question is this a bull pullback or is this going to be just continuing to the downside? But I mean, look at this price action. We are back in the range. So even though it looks like a pullback, we are back in the range. So we need to bounce from here. This is a critical level. If you look at the velocity, we haven't really changed or budged from this level. So going into next week, Aussie looks weaker more than stronger. But we'll have to take a look at next week and see if there's buying comes in off of this level. But right now, I don't like it. This is another price action I want to see. And then we have the Kiwi, which also is a risk-on currency. But take a look at this. I mean, this is what I find a little bit disappointing is that it's not following the risk trends. Markets are up substantially for the last 2 weeks. But take a look at what happened with these Aussie and Kiwi. Well, Aussie caught a bit of a rally, but Kiwi did not. So I think this is an important takeaway that we are not getting a traditional risk on and risk off in currencies. What we are getting is more of his currencies doing its own thing while following relative center weakness. And I think the bond market's really moving some of the currencies as well. I mean, take a look at the dollar. The moves have been identical between the dollar and between the bond market. So I think that's what we really need to pay attention to instead of the risk trends, because that's what it's really following. Back to you, Rob.
Ankit, and you nailed it on the head, where a lot of times we get, again, these huge macro trends that just push currencies around. And right now, everything is kind of doing its own thing. And so when that is happening, you can't expect the normal macro trends to do what they usually do because they're not working right now. In these times, you got to throw them away. Typically, the Aussie would be soaring right now. The Kiwi would be soaring, and they're not. You really just have to look at each currency individually, say which one's working, which one isn't, and then really focus on which ones are working. Now, here's a great thing. When you take a look at the currency market, the Forex market, it is messy. It is muddy right now. Guess what's not muddy right now? Crypto. Crypto is actually not muddy at the moment. So we like Bitcoin, Ethereum. I like Bitcoin better. On the downside, I think these are really good shorts. I really like both CAD and Yen to the short side. Here's the problem. I'm actually quite confused on what to go long against those. Because again, the only thing that looks good on a chart to me is Euro. Everything else, I don't like. So right away, I'm thinking going into the week, again, long Bitcoin, long Euro, short Yen, and short CAD. But here's what's moving right here, right now. So as you can see, if I'm looking to be long Euro, okay, that looks okay right now. But short Yen, it's not there yet. Yen's at a 0. And I've got Euro over here looking nice, but Yen's not looking nice. So I also think, okay, what about Euro CAD? Here's the problem. Look at CAD. CAD's at here at a +1. What are my options here if I'm looking to say, okay, the first part of the week, what's working? There's really only one option here to me, and that is Bitcoin and Ethereum. Now, as the week develops, then I can start to see, okay, is the yen weakening a little bit? Is the CAD weakening? And then I can make all those trades. But early on in the week, I really think there's not a whole lot out there to trade. And I think you really got to take a look at cryptos here. So let's go ahead and look at some possible setups. Of course, we're going to be taking a look at Bitcoin first off. Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader? So here is Bitcoin on a 4-hour chart, and you can see we basically went nowhere from the 24th of October, and we broke out on the 8th of November. That is a really nice 2-week base. This should have some more to go in it. The big question is, where is the next resistance? And we got to go back a really, really, really long way to try to possibly find where is resistance. Where's the next level of resistance on this? And you can see we're running into some overhead resistance here, but next resistance on this, I'm looking all the way up to maybe 47,000. Now look, that's a massive rally. That's about a 27% rally. I don't think it's going to be that much, but at the moment here, Bitcoin looks good. The big question is, where is the setup? Where is the entry? We had a nice bull pullback off of this. We're now running back into these areas. I would love to see this just calm down here in the 37,000 range. Give me another day or two, and then a breakout above 37.5. To me, that looks really good here on a Bitcoin entry. Let's take a look at Ethereum while we're here. Ethereum is having a nice pullback here. Give me a pullback. I would love to see a pullback right into this little area where it had a little pause. That's around 2050. If we can get into this area and start to put in some bullish candlesticks, I think you could take a look at a long on Ethereum as well. And I'm going to pull up one Forex one before I turn it over to Ankit. Euro Yen. This is my favorite setup here, Euro Yen. And you can see here, the chart looks amazing. The chart looks absolutely great here. We were basing, pulling back here, and you can see we're breaking out of the top here. 161.90. I think the entry is perfectly right here. If you want, check it back in on this next week, see where it is. But to me, this is my favorite Forex trade for the week. Ankit, what are you looking at?
I agree. That setup looks great. Let's go into next week. I want to emphasize a little bit on the dollar because I think dollar is what's going to move. So the big question is, let's Rob take a look at the dollar basket. So let's see where we are right now. I want to show that this is still at a crossroad. The bond markets are rallying, especially the short-term rates are rallying. So which is again helping the dollar. We are not back at the highs yet, but we are back at the resistance. So next week, when we get the CPI, one or two things going to happen. If that number comes out hotter, the dollar's going to break out. That dollar, the number comes out weaker, then that is going to tank the dollar and tank the bond yields. So I really have to prepare for best case and worst case scenario. If I go for dollar long, I think dollar yen, Rob, if you pull that up, that looks the best. I mean, all that hype about that the 150 as an intervention level, that's come and gone. I mean, nobody has come in and tried to fight that level. So I think that there's a less risk of the intervention at this point, and I think this can run higher. We are back at the highs that we initially took. So dollar yen goes on the top of the list, especially if I want to play dollar to the long side. I can also take a look at dollar CAD, which has also been doing well. I mean, we looked at how CAD is showing weakness. So to take a look at where the dollar CAD is, we just got back to that 138.50 area. So this again looks more like what the dollar basket is doing. So I think next week that dollar, the 138.50, 139 is the key level of resistance, which is about less than 100 pip away. But that again is a key level of resistance that we can either break and make a new high or roll over from there. I think next week it is a make or break it for the dollar. And again, if you go back to last year, we talk about seasonality patterns. Last year, this is the CPI report was the one that really moved the dollar, the bond yields, and the market. So I think we are getting a head start on the equity markets, but notice that we haven't really gotten that big start in the yields or in the bond market. They moved a little bit a week before, but this week was more normalizing to what they were doing before. So those two, Rob, I really like. I also want to point out Euro Swiss franc. Just want to highlight how we're getting a similar price action as last year. Remember, we have favored Swiss franc over the euro. But take a look at that support, that key support area that we broke. And look at that, we are back above that level. So around the same time last year, October, November, euro actually was stronger into the year end, especially against the Swiss franc. So the question is that, are we setting up for a similar pattern here? And I think we do. I think we are. We made a nice reversal. We are now in a basing pattern. So if you break above that 96.60 area, 96.80 area, I mean, this is where it's clear that the euro is a better long compared to the euro, compared to Swiss franc. So that's what I'm looking at, Rob. I'm excited for next week. Like I said, I think dollar is the one that's going to be the big mover, and that's what I'm paying attention to.
You are absolutely right. The dollar is going to be a very interesting thing to watch. Now, I'm going into the week pretty neutral on dollar, but I'm really excited for that CPI report because, as you said, it is going to move the dollar either to the upside or the downside. And one of the currency crosses I'm looking at, if it is to the downside, I really like euro dollar to the long side. So that's something as well to take a look at. Let's wrap this up. CPI on Tuesday, Aussie stuff on Tuesday night. That's really all the news for this week. And I think it's going to be a good trading week. So let's go out and grab some pip. Everyone have a great weekend, rest up, and let's get back to work next week. Goodbye, everybody.